So a common question I get when someone wants to get qualified to buy a home is how far in advance should I start working on my pre-approval? If I'm looking to buy 7 months from now, isn't it too early to start planning for that now? And actually, no, it's not. And it goes to say that that's exactly what mortgage planning is. Mortgage planning is seeing exactly where you stand today, finding out what you'd qualify for, and whether or not you need to do anything income, employment, or credit-wise before actually going and buying a home. And here's an example of why it's important to mortgage plan with your lender, broker, or bank. Let's just say that you're ready to buy 6 months from now. So you go and your lender pulls your credit up and you find out that your credit score is a 679. It's not bad credit. However, what do you qualify for with a 679 credit score? Well, if you're someone who maybe has 5% to put down, which is very common in this market, there are things you want to consider. You have your 5% down payment. But what does that credit score determine for you? Not only your mortgage interest rate, but when you're putting less than 20% down, more than likely you're gonna have what's known as mortgage insurance, or PMI. So your credit score actually would help determine the cost of that PMI. The lower your credit score, the higher the cost of the mortgage insurance would be. So you have your mortgage insurance of $350.55 a month, your interest rate of 4.625%, using your 679 credit score with 5% down, gives you a total monthly payment of $2108.91 plus homeowners insurance plus property taxes. Now this payment is only your principal, interest, and mortgage insurance. Now, it's a good thing you're not ready to buy today because it gives us the opportunity to advise you on exactly what you can do to improve your credit score. Because just by getting your score up 1 point, which doesn't seem like much, to a 680, it makes a really big difference in the monthly payment because it saves you money on the monthly mortgage insurance, PMI, as well as the interest rate itself. And this is a real world illustration of exactly how much it can save you. On a $360,000 property, the mortgage insurance, just by getting your score from 679 to 680, drops by $100 per month. That's $100 more in your pocket every month. It also saves you money on the interest rate. 0.5% right now in this market. The payment for the same house with a credit score only 1 point better would be $1,881.59 plus taxes plus insurance. So this is why mortgage planning is so important. So I always say, if you're not ready to buy today, maybe you're in a lease and your lease doesn't expire for another 6 months and you really want to wait until that's up, which is a very common thing that happens. Speak with someone today to find out what you should do to get in a place to qualify once you're ready.